Hey, it's Soleil, and this is episode 303 of the Orange Pill Investor. And no intro music today. I'm still waiting on my two monitors. So I'm kind of AFU right now, trying to share one window and give me a minute to load up the live on YouTube. For some reason, when I join Jeff's Riverside and when I joined Anders, actually he might have, can't remember if he was live streaming to X and YouTube at the same time. But anyway, when we're in the True North calls, we see both sets of chats coming through, and on my Riverside, I only see the YouTube chats. So I'm gonna have to contact tech support and just see if I'm doing something stupid. What's up, RJ? Let me see if I can pop out this chat. Just another minute. But I will have the chats minimized, so I'm just dealing with one laptop screen. So I'll say what I have to say, and then I'll try to come back and see if anybody has anything to say as well. But today I want to talk about MicroStrategy risks. And the reason is because I think most of the bear talk is just moronic. I don't, it's a lot of it's just the same crap over and over again. It's like, the MNAV is too high, or, um, you know, he's wrecking the market, selling selling the ATM, and why isn't number go up happening faster? Um, what Ponzi? I guess the cool thing now is Bitcoin was a Ponzi, but now it's got SEC approvals for ETFs and all that stuff. So now the next best thing is MicroStrategy is a Ponzi. So I kind of feel like I have to make some of the bear cases myself, because most of the bears are incapable. Um, so the first one that kind of came to mind is and the way that I think about something, it's called reverse thinking. And you basically, when you want to accomplish something, you try to imagine all of the ways that it could fail, right? You imagine yourself in the future and my project has failed, and what would that project have looked like, right? Maybe you hired you hired people for cheap and they didn't know how to do the job, or there's things that would jettison your project. And if you imagine those things ahead of time and then you just don't do them, then you're much more likely to be successful than if you actually sat down and tried to figure out all the positive ways to have a successful project. If you figure out all the things that can screw you over and then avoid them, that ends up actually working out better than trying to succeed. So if I imagine this MicroStrategy project failing in the future, how would that look? And it seems to me, especially based on one of Saylor's own admissions during his interviews, is like kind of part of their strategy right now is to use the ATM sales. Obviously, we know one reason is to generate cash that they can buy Bitcoin with. But it's either a unintended side effect that they've discovered, or it's intentional. But that ATM selling also creates volatility, so it's stimulating the market. So the market wants to go up some, and then selling pressure drives the price back down, and it's just it increases the volatility, and if that's a feature, not a bug, right? Volatility is vitality, been said a million times, right? But that's a little bit of a setup move as well, because it's that volatility that creates a favorable market for the bond offerings. So they've got the 42 billion, half of it's ATM, half of it's bond, but it's the ATM selling that's kind of setting the laying the groundwork for a positive bond environment. And this part is not my idea. This is what I understood from his interview recently. And so they've been able to do these things very good terms, borrowing at virtually 0% or next to 0%. And if they can amp up the volatility even more, and if the Fed lowers rates, percent here and there, they could be getting paid to borrow money, right? They could have some negative interest rates, and I think they're already low. I can't remember. You'd have to ask the real quants, but they're selling these things at frickin' like 50% out of the money or something crazy. So to me, one avenue of failure is if the bond market disappears. If there's no one that wants to buy the bond, the convertible bonds, then that, half of the 42 billion dries up, and it also kind of makes the ATM side less effective, because now it's not the setup that's kind of working synergistically with the other half. And how would the bond market dry up though, right? Well, Bitcoiners, we've been talking about Bitcoin's going to eat gold, and after it's done eating gold, it's going to eat the bond market. And I don't necessarily think that the bond market is going away, but if Bitcoin starts to eat the S&P 500's lunch and eats gold's lunch and eats, real estate's lunch and eats the bond market's lunch, is MicroStrategy to a certain extent helping to create and encourage hyper-Bitcoinization, but then does hyper-Bitcoinization damage one of the tools that MicroStrategy uses to generate that they use to buy Bitcoin with? So that may be like a 0.00001% chance thing to happen, and there may be obvious holes in my little theory, and it may not even be worth considering as a real threat, for 20, 30, 40, 50 years. Like, there's no way I would think something like this would happen in 5 years. Certainly not during the rest of this bull cycle, if in fact the 4-year cycles continue. But that's one, right? So I would at least be willing to have a discussion or argument about the merits of this one. But just saying that the MNAV should be 1x multiple is, old. It's not an interesting discussion anymore. And so the other one I would say is something that I saw during a Jeff Booth interview, and I'm hoping after people have time to maybe to watch it themselves, we'll discuss it on a True North call. And that was something that Jeff Booth kind of disagreed with Saylor on. And most of the people that disagree with Saylor, I don't necessarily dismiss out of hand, but you only have to listen to Saylor talk and most of the bears talk for 5 minutes, and you can tell who's right and who's wrong. And generally, it's not the bear. But in this situation, Jeff Booth is a Bitcoin maximalist, and he doesn't seem to have anything negative really to say about MicroStrategy. I don't think I've ever even heard him comment on it. But one thing that he said he disagreed with Saylor on is the ability to collect a yield. And if I understand his argument correctly, there's a decent chance that I don't. But what I kind of understood is the only way to gain a competitive advantage when you're offering yield, right? And this is what gets the banks into trouble, is the first bank says, we'll give you 5% interest on your money. And then the other bank's like, no, we'll give you 6. And then other banks, we'll give you 7. And that's the only way that you can attract customers is by offering higher and higher yields. But if the market doesn't offer, doesn't facilitate that type of yield, but it's the only way to get customers, then these banks are encouraged to just go, more and more fractionalized. And they take what? They take $100 deposit, and then they don't just loan out $100 and see what kind of interest they can get. What do they loan out, like 10 to 1 or something? So then they give like 10 $100 loans, and I may have the exact numbers, off a little bit, but the point is still the same: is that they loan money that they basically just don't have. And I think the assumption is that they'll get bailed out by the government or whatnot. But it seems like that's where these cycles come from, right? Credit gets extended and it expands, and then it keeps expanding to a point where some people start to default, and then, as Ray Dalio says, like one person's debt is another person's income or something like that. I'm screwing that up a little bit, but basically if one person stops paying their bills, that's income that someone else is not getting, and then they can't afford to pay their bills, and it's just a domino effect, and that's what creates these bank runs. So if MicroStrategy were to, in a couple of decades or whatever, if they start offering these yield products, and if the only way that they could compete would be to start, basically turning themselves into a banking instrument, then I could see that being a risk. But as I've probably watched, I don't know, 100 hours at least of Saylor interviews, and I can't imagine while he's the chairman that they would do something like that to get too over leveraged. But it's just, I'm basically just trying to imagine every possible way, every credible, way that's not just MNAV or Ponzi. That's actual things worth thinking about. I don't think either of them are very likely. But especially the Jeff Booth one, even when Saylor had the back and forth argument with Safe on that interview, there was parts where I thought, well, Safe just doesn't understand some of these things. But then at the same time, I was like, well, wait a minute. I understand why some people want exposure, limited downside exposure to Bitcoin now. But in 20, 30, 40, 50 years, when Bitcoin is the standard, yeah, if, like, everyone is orange pilled and the whole planet basically, like, who are these people that are going to be afraid of the downside? Who are these people that are going to want all the upside, or, some of the upside of Bitcoin and none of the risk, as kind of Bitcoin's volatility starts to taper off a bit, and like everybody understands it and nobody's afraid of it. And really, it won't even be that everyone understands it, because I don't know the financial system works now. But we understand that it works. Somebody's back there making it work. And at some point, 90% of the planet will probably still not understand how Bitcoin works, but that won't matter because they're still all, getting paid with it and buying shit with Lightning. Nobody will know how Lightning works, but it won't matter because it'll be so commonplace. It'll just be like waking up and putting on your shoes and tying your shoes. So those are the two, I guess, kind of bearish threats that I could come up with that aren't just the regular old BS talk. But I guess I can talk about the market a little bit since that's over, and then I'll check chat. So I don't think there's anything that I need to do today, but let me just double check and tweak. I looked at the IRS's rules for trader status, and it's a little bit more complicated than I thought. I will definitely qualify I on most of the requirements. The only one that I have to double check and see how many positions I take, right? So if I have 10 covered calls on at any time and they're weekly, then that means 52 weeks a year I'm going to roll, and I'd end up with 520 transactions. So I think that would qualify me as like high frequency trader status. And even if it doesn't, I mean, I could go in there on Wednesdays and like roll the strikes up or down once just to make sure that I get credit for having enough transactions. It's kind of weird. As a paranoid crypto anarchist, I'm not surprised that the government has red tape and dumbass fucking rules. But the weird part about it is that you end up. So actually, I think there's a lower bar to be considered trader status, and then you're afforded certain tax benefits. You basically get to trade the trading as if it's your own business. But this elevated trader status has even more requirements, and that one you actually have to apply to the IRS, and they will either approve you or not. And I got to double check all of this crap. I believe the deadline is going to be like whatever the filing deadline is in 2025 for your 2024 taxes. And it might be the extension deadline, because I saw somewhere, I think it was, I can't remember if it was Investopedia or whatever. But if I want to do this new tax status in 2025, I can't wait till December 31st, 2025. I think I would have to apply. I don't know if it's going to be the April 15th date or like the July date in 2025. And the other piece of that is instead of choosing like first in, first out, or last in, last out for your trades and trying to figure out, do I have long-term cap gains and short-term cap gains, I would end up it's called mark to market, and it treats every single position as if you bought it on January 1st and sold it on December 31st. Whether you bought or sold or not, it's basically assuming or it's going to calculate your gains based on that, and you end up getting to file as. And then that elevated status, you're actually immune to the wash sale rule. So if you sold something at a loss and then bought it back the next day or within 30 days, most of us suffer that wash rule penalty. So that's kind of a pain in the ass if you're not paying attention. But I believe if I'm not a tax professional, so do your own research or whatnot. But from what I understand is like you don't have to worry about that, and I think you get more leeway with the losses that you can claim or whatnot. But anyway, for now, I got to deal with the same old, same old. So let's take a look here. Kind of a friendly reminder too for everybody who just thinks we should be at $1,000 MicroStrategy already. Like, Bitcoin support is at like 75,000. So if this is your first cycle and you think it's just number go up all the time, take it from somebody who's been through more than one of these. That, yeah, we could easily see 75 before we see 150. So I'm hoping we don't, right? But I'm not a technical analysis guy, but support and resistance, I don't know, they're probably real. So same thing with MicroStrategy, right? I was still buying long leveraged positions here, and the ones that expire on January could easily be losers. So I might have been getting a little FOMO and getting carried away with the hype myself. And just while I'm on this tab, maybe I'll just take a look. But it's funny with that IRS rule. Like, I'm tempted to just take something off or put something on. Oh God, just so that I can get more transactions now. Which, that's the sad part about all these government regulations, is it just encourages people to try to adhere to the letter of the law and then just do weird things that you wouldn't normally do. Like, I shouldn't be thinking about putting on positions or taking off positions just to get more transactions so that the IRS doesn't deny my application for trader status. Like, I should just be able to do whatever is the best thing to do. And then, everything should work itself out. I guess I could roll this one down. So I sold the 17 call for CLSK for 47. It's Tuesday? Yeah. So it's Tuesday. This has only been on for like one day. Date sold 12/6. Okay, so I sold it on Friday. But there's only a nickel left. So I would have to hold this Tuesday, Wednesday, Thursday, Friday just to collect a nickel. That doesn't make any sense. So I will close this. And let me just double check. I have 300 shares. And I've got 2 covered calls at the 13 strike. And that is wild. And this is why I don't freak the fuck out when my strikes get breached. I've been sitting on these calls waiting for 1220 to come around for 40 days when the price of CLSK was like 17. Some people will freak out. Oh, I got to roll it. I got to close it. My share's going to get called away. That's fine if they get called away. But also, what happens sometimes over time is the number goes down. And right now it's 1 penny below my 13 strikes. And if it's still $12.99 next Friday, saved myself $300 a contract by not panic rolling these damn things. And even if the price does stay 14, 15, 17, whatever, like, that risk has to be managed when you open the contract, not 2 days later, not 5 days later. If I was going to exit that position, I would probably just pay to close it and then sell the 100 shares. That's probably the only way and then I would just go trade something else. All right. I've got these 415 puts that are like way underwater. So I will get assigned on these bad boys. Probably. I got paid 78 cents a pop for them, so my real cost basis will be like 14.25. So that'll be fine. I mean, unless the price drops under 10, that would get dicey. But I could probably still find some premium out at 45 days. So running the wheel, this is just all part of how it goes. But let me just double check. Okay, so I got the 300 shares and I only have 2 covered calls on. The price is 13. So now do I sell Friday for $1.30? 10% of the money gets me to like 14.50. I can collect another $19 here, which is about 1.5% for the week. Yeah, might as well. This knocks my cost basis down another $17. And let's check what else I got. Do I have... Yep, I got a Riot call as well. This only has 3 cents left on it, times 100 since this is $2. I can close it for 3. That makes sense. Look at that. 2 more transactions for the IRS to count. Write it down. All right, same deal. Let's see if there's some premium that can be collected at a lower strike. 10% of $11 is $1.10. If I sell this at $1.10 out of the money, that would be 10% out of the money. That gets me to $12.20. So if I round up and go to $12.50, I can just barely get 1% here. But of course, that's for 4 trading days. So that's not terrible. 1% a week is 52% returns a year. So not too shabby. It's not MicroStrategy, but on a small account, what are you going to do? Okay, so I think that actually filled as I was trying to replace it. Let me just refresh and see what happened here. Nope, I've got... Oh, it did go through. Okay. Hey, likey. But yeah, for MicroStrategy, like I know we want it to be 1,000. I definitely want it to be 1,000. My call debit spreads that expire in January want it to be 1,000. But support is like 250. Oh god, 250 would suck ass, you know? I put in my 2 weeks and then the price collapses 40%. That would be annoying as shit. But those are the things that the market gods like to do. Spiteful little bastards. All right, let me check my Tasty Trade accounts. Don't have anything expiring this week or anytime soon. These 660, 760 call debit spreads, I only have 4 of these. Need a huge move. I didn't give myself very much time to be right. So I've had these open for... I have to make this bigger. I've had these open for 18 days. But yeah, I generally don't like calls this short dated. And 800 strikes, even when we were over 400 a share, that would require another doubling by January to get to the 800. So that might have been a little bit overly optimistic. So as it currently stands, these are both losing positions, as well as the the 660, 760s. But we'll see. Same thing. I was taking some profits, and I bought a couple of these 1080 strikes for January, and I would love nothing more than for a squeeze to occur. This was kind of looked at as a historic expiration date, and like, a little bit of hype, like, oh, maybe something amazing is going to happen here. Well, it's going to that real soon. uh, or these are going to get destroyed as well. I bought these for $1,000 and they're worth like 380. So, but again, position size was not something. If I lose $2,000 on this, it was kind of a lottery ticket. But definitely danger zone. Anything under 90 days is kind of risky. So these Aprils I am not worried about in the least. The 530 strikes, I believe, were the highest strikes available back when I bought them 40 days ago. So only need another $150 to go in the money. That would be awesome. And then every 90 days, I'll roll these out to 180 again. If they get to around 0.7-ish delta, they're only at 0.48 now, I would definitely start selling covered calls against these. As it stands now, I could probably do some kind of ratio spread, and I could probably sell a covered call against 2 of these, because 2 of them added up together is going to be 96 delta, which is practically 1-to-1 ratio. Like, that's almost owning shares at that point. So that would be pretty fine to do. And then these are 0.6 delta. So these are getting close. I mean, I could probably figure out a way to sell covered calls against these if I really wanted to. But with the price being down, I just don't want to. When the price gets up to 450, 500 a share, maybe, I may consider that. But again, I could probably sell covered calls against these in like a 1-to-2 ratio. So 1 covered call for every 2 of these. I could probably do 3 for 5 or something, maybe even 2 for 3. Yeah, those would probably be all fine ratios. But I'm not terribly desperate to do that right now. If I needed some cash to pay the bills, then I would absolutely do it. And then, of course, my January leaps, I'm not worried about these. I bought these when 890 was the highest strikes available. And however, they are currently underwater, big time. So I paid 16 grand for each one, and they're only worth 9. But again, there's plenty of time to be right on these. So, hell of a lot safer position, even though I'm underwater on them, trying to get over 890 by January 2026 versus trying to get above 1080 January 2025. So, not a lot of time to be right in 38 days to expiration, and I need the stock to triple. Yeah, the odds are not good here. But that's why the frickin' delta on them is, so low. Like, this is just a snowball's chance in hell of happening. If it happens, great. If not, it was a small position. All right, let's switch gears to the IRA. I've almost got 300 shares back. But again, I got a little overzealous with these 1080s. What did I buy these for? Yeah, bought these for $4,000. They've collapsed like 90%. They're only worth $300. I do have the two covered calls that are against these two leaps. The covered calls are doing pretty well. However, did I just roll these yesterday? Let me make this a little smaller so that I can see how many days open. Yeah, these are only 1 day open. So I rolled these. Oh, no, I'm sorry. I rearranged my columns here. Okay, so my trade price was 11 and the price is actually still 11. Okay. So I've only had them open for 1 day. Nothing to do here. I was looking at the delta. I thought I sold these for 28 and only bought them back, and I could buy them back for 11. Yeah, so nothing to do here. Again, my Decembers I'm not worried about. These are still in profit pretty well. And at a 0.62 delta, I may have to start paying attention more to this one. But I could probably form some poor man's covered calls against these as well. So if the price gets us back to 450-ish or 500, I think the delta on this would probably appreciate. That's something I need to pay attention to. All right, the joint account. I don't think I have any cash. Nope, good. 80 shares. I've got one covered call against which one of these? Probably this one. Didn't get too greedy in this account. I've got these Aprils, which I will roll before they get to 90 days to expiration, or before they get under 90 days. So, no positions to take there. And the allowance. So I just did my balance transfer, which has not kicked in yet. So I've got pending cash. I'm removing $15,000 from this account and transferring it over to the main account because I spent. And all of the money that I have is basically in these accounts. I mean, I have just enough in my checking account to pay the bills. I do kind of find that, is it Strike that has the product where you can just deposit your paycheck into it and it immediately converts it to Bitcoin, and whenever you pay your bills, it just automatically converts? I can't remember if that's a Strike product, but that's kind of intriguing to me. But I don't have a paycheck anymore, so it doesn't matter. All right, I dumped most of my long calls that were in profit here. So what do I have left? I've got a few shares. Now, with the price being down, I mean, I said that, support on MicroStrategy is 250, but to a certain extent, every dip is a buy. But the only way that I can get cash is if I sell shares. So, is this a good time to sell some shares and buy some long calls? Let's check the options chain. And see what I can get beyond 180 days. So I'm looking at June. The 1080s in June would cost me $5,000. Okay. $10 shares is 3,700. So what would I need to sell? 15 shares? And the way that I'm thinking about this is I don't know how much, but I kind of sometimes I think about sometimes people like to have pairs trades. So if you have two correlated assets, then you could just like buy one and short the other. I can't remember how that one works, but in this scenario, I intend to have Tesla be my pairs trade against MicroStrategy next year, right? I'm take a bunch of profits in MicroStrategy. I'm going to plow them into Tesla. Hopefully, they don't both go up at the same time. Like it's kind of a hedge for the potential 2026, 2027 bear cycle, right? In that case, hopefully Tesla would not be tied to Bitcoin's price, and maybe half of my account would be preserved, or even go up and counteract however much MicroStrategy is going down, if in fact it does go down. But if I don't have two positions, like I have just MicroStrategy. Well, the optimal time, where's the chart? If I had a crystal ball, then I would just, I would ape into long calls here, and then I'd sell them here. And then I'd buy long calls here, and I'd sell them here, buy them here, sell them here, buy them here, and I'd sell them way up at the tippy top here. But by doing that, I'd have to sell into cash, and then I would have dry powder as I'm hoping that the price goes back down. But absent a crystal ball, what I like to do is I've got some calls and I've got some shares and some long calls. And then as the price goes up to here, maybe I'm selling some of those long calls. I'm taking profits on the leverage. But if I don't want to go to cash, I can buy shares here. And it doesn't really matter if the price crashes when I own shares, as long as I'm not doing it on margin, because shares have no expiration date. So I can buy shares at the top. I can buy shares at the all-time high if my hodl horizon, and then if I want to take advantage of this dip, even though I would be selling the shares here at the bottom that I bought at the top. Buying calls is even more dippier, right? Like this is the dip that I want to buy. So it sounds counterintuitive to sell shares on the dip, but if I'm selling them and I'm using calls and shares as a pairs trade against itself, then I'm getting an even bigger discount on long calls here, which I can then sell here, or as long as I have, 12 months on them, I could sell those here again. And we don't know the future. We only know what has happened, which is why I prefer reactive trading, right? Did the price go up? Okay. Sell some long leveraged calls that for profit. Buy some shares with the premium. Oh, did it dip? Oh, it did dip. Okay. Now I can sell shares and I can buy long calls. It's just rebalancing, really. If this was the traditional 60-40 equities to bonds, and equities went up, now I probably have a 70-30 asset, equities to bonds, and now I have to sell some of those positions to get back to the 60-40. So that's just basically what this is doing. All right, that was a long ass way what I want to do in this account. So did I actually do it? No, I haven't done it yet. So in order to get some buying power, let me sell, and I think I said I would sell 15 of them. No, that doesn't get me four. Hold on, let me try that again. That's going to give me, $5,500 credit, but it's only increasing my buying power by 4,000. I don't know what the hell that's about. Fuck me, that was loud. Okay. Yeah. Yeah, that was super fun. Jesus. All right. That gives me about $5,000 to play with. So let's buy this. Oh, and see, now I'm trying to buy shares. Pain in the ass. All right, I don't want to pay full price. Let's try to get filled at 50.65 and make sure. Yeah, I think I've got a little bit of margin to play with. So when this comes, yeah, probably only needed to sell 14 of those shares. That's fine. All right, so now what does this account look like? I dumped some shares on the dip, which doesn't make sense, except that now I have a leveraged long position, right? And the way to tell that I have more exposure now is I sold 15 shares, and since one share is one delta of exposure, I used to have 33 delta here. Now I only have 18. However, now I have 31 delta of exposure to MicroStrategy's price for the same dollars. So I'm paying less money. Like, you go to get gas. You're like, okay, who's got the cheapest gas, the cheapest dollars per gallon? Well, I want the cheapest delta, I want the cheapest dollars per delta that I can get. Or flipping that on its head, I want the most delta that I can buy for the least amount of money. But I prefer to have dollars in the numerator. It just seems more easier to work with that way. But so for the same amount of money owning shares, I only had one delta of exposure on all of those 15 shares, right? 15 delta. But now I have twice as much long exposure, which in my opinion is what I'm looking for when the price is down. I'm considering this a dip off of all-time highs, even though the chart says that this is ridiculously up, right? This is like 200% up from 180 a share, right? But compared to 500 and what did this go to? This went to like 530 or something, right? Whatever the hell it went to. This is a 20% dip off of all-time highs. So depending on how far you want to scroll out, you can call this a dip, or a rally. This is undervalued or overvalued, depending on how you look at it. But by June, I think this will be fine. 192 days to expiration. That's kind of close though, really, because buying calls here, that would have got you right about here. So you'd have just missed the next pump. Hopefully, I won't have to wait 6 months on the next pump. But if I do, it probably won't matter because I won't be holding these to expiration anyway. I can't remember if it was I think I covered it in a video. Anyway, if you don't want your calls to expire worthless, there's a simple trick to never have a call expire worthless, right? There's a statistic that talks about how many long calls that people buy expire worthless, but you can never have that happen to you if you just never hold them to expiration. If you never hold it to expiration, you can never have it expire worthless because it will never expire, ever. So my plan on these Junes would be to roll them when they get to about 90 days to expiration, when the value really starts to crater out of these things. So even if I lose half the value by, what's 3 months early from June? Is that April? May, June? No, March. March, April, May, June. Yeah. So in March, I would be looking to roll these. I'm not going to let them get, even if the price is still 372 in March, I'll just roll these out. It's just one, but I'll roll this out as far as I can and, whatever I can afford Hopefully there'll be some higher strikes available by then. Maybe there'll be some 1200s or some 1500s or something. But or maybe a lot. Maybe I will have accumulated 2 or 4 or 6 of these things if I can dollar cost average into them. Right? I could probably, I could sell another 18 shares. If the price drops another $50 a share, maybe I'll sell more shares and get another one of these and dollar cost average into it. So that's my plan with positions like this. All right, I think that's all the transactions that I need to take today. So let me finally tab over to the. If anybody's got anything to say. Dale says, "Oh, hi there. What you doing?" Hopefully you were able to see. Ah, shit. So VN says, "Can anyone see anything?" And then how? So I did this whole entire fucking thing, and I didn't check the chats, so nobody saw a goddamn thing. That's fucking awesome. All right, Howard says, "If you're sending, I'm not receiving." Let's see if they're saying the same shit on X. Fuck me. So yeah, where you at? Hi, boss. Neither video nor voice works. If you're sending, I'm not receiving. No AV signal, no sound or video. So that's fucking awesome. I got 717 views of absolutely nothing. So that's fucking super. Let's hope this actually recorded and I can just re-upload. If not, well, go fuck yourself. Later. Be good, y'all.